And look, these new tariffs are just the tip of the iceberg, people. If China doesn't deal, then I have a pretty good feel that Trump views this 10% duty as nothing more than an opening volley in the next round of the trade wars. He's itching to take all the tariffs to 25. He is doing that. At which point he thinks the Chinese will realize that their economy can't take this kind of pain. They'll need to play ball. Remember, Trump smells blood. He believes the Chinese economy is weaker than ours. He's right, and he doesn't mind pushing their economy and their stock market over the edge. What I am hearing over and over again, it's better to take tariffs high and bring them down than to not have tariffs at all. What does it mean for you? If you have stocks with some huge gains, I am giving you my blessing, because the market wasn't down that badly, to take a little off the table. Not a lot. This is not that call, the giant sell call. If I see that in Twitter, I will come after you with everything I have. We are barely down, though. We haven't even seen the Chinese response yet. And I have to believe it will be swift. And when they do, the stocks are going to go lower, and you'll be glad that you sold a little. There's no reason to be a hero here. You got to wait and see what happens. That's why I think it's too soon to buy anything but the domestic stocks that have zero exposure to China, either as a supplier or as an end market. After the smoke clears, companies that cater to small and medium-sized businesses could be worth buying too. Again, what to sell? Look at what you have a lot of gains in, okay? I'm not going to give you a list. I'm not going to give you a list because there's a lot in the S&P 500 that's too high after this. Second, the 10-year going below 2% is your green light to buy the utilities with safe dividends. My favorites, to repeat them, and it's been the same three for years and years: Con Ed, Dominion, and Best of Breed American Electric Power. It is still not too late to own those. Most importantly, though, once you take profits, and I sanction taking profits, there's no reason to start buying immediately. These tariffs are game-changing, because they make it clear that President Trump is not going to stop. He'll press and press and press because he is furious at China, and he thinks the trade war is a winning campaign strategy. See, he wants the trade war going into the election. These tariffs will hurt you and me. We can take the pain. We need to, but you must recognize that the pain is going to extend to your portfolio. Unfortunately, this makes it hard to justify buying many of the usual suspects that would normally circle the wagons around in any economic downturn, and we're worried about a recession. That includes even the magnificent Procter & Gamble, to use an example of something that he just reported a great quarter, that normally I would say, buy, buy, buy. They may do too much business in the PRC. Might be a natural target of retaliation. One thing's certainly clear. Jay Powell, our clever Fed chief, had great intuition about these tariffs. Can you imagine how bad today would have been if Powell hadn't cut us that quarter-point break? Plus, he's now got a lot more ammo. Don't listen to the people who say he doesn't, please, because you see they're wrong. I think after initial stumble, Powell's doing a great job. And the critics, including the president and some other people, are saying he's not a great communicator. Why don't you give the man a break? The time to hit him was when he was wrong, not when he's right. Look, I believe the president's right to crack down on China. I've been making this argument for decades. This is nothing new. I used to say the same thing when I worked with Larry Kudlow, who was a great free trader back then. He's now the president's chief economic advisor on the show we had for years called Kudlow and Kramer. I was pro-tariff back then because I recognized how China had targeted and destroyed so many American industries. I've been passionate about it for decades. However, I've always accepted that this kind of move would hurt the stock market, at least in the short run. But I'm not just for higher stock prices. I'm not that craven. So again, there's no hurry to start picking among the rubble here. We're now back in a world where international companies will be forced to cut their forecasts. Here's the thing. As interest rates go down, the alternatives to the stock market keep getting less and less enticing. Sure, gold's worrying because it always does well in times of economic chaos. I'll have 2 gold stocks I think you should buy later in the show. But high-quality dividend stocks without much Chinese exposure will be the winners once the smoke clears, just as they were after the last 2 rounds of tariffs. I've studied those too. That's what won first. Bottom line, we just have to wait until the dust settles, please. Then you can start buying some high-quality companies at a discount that don't have Chinese exposure. And you will definitely get a discount, I believe, because it's too hard for individual stocks to escape the downward pull of the entire S&P 500 when estimates have to come down for so many different industrials.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.